Hey everyone, welcome back to Corporate Decoder. Today we are diving into the nitty-gritty of a company's big announcement, and let's just say things are about to get smaller. This is Rithm Property Trust Incorporated, and they've just dropped a Form 8K, which is basically a current report filed with the SEC to announce major events that shareholders really need to know about. Like yesterday, and folks, the big news here isn't about earnings or new ventures, it is about a shake-up in their stock. So, on the 19th of December last year, Rithm Property Trust Incorporated decided it was time for a little consolidation. Now, they're telling us about their common stock, which trades on the New York Stock Exchange, and their 9.875% Series C fixed to floating rate, cumulative redeemable preferred stock. Just like most companies, they have common stock that represents ownership, and this preferred stock, which is a bit like a loan with some special perks. The main event here is what they call a reverse stock split. Imagine you have a sheet of paper with 6 little pictures on it, and the company decides to take those 6 little pictures and smoosh them together into one bigger picture. That is essentially what a reverse stock split does. It reduces the number of outstanding shares of a company's stock. Specifically, they are going to take every 6 shares of their common stock and turn them into just one share. This is a pretty significant ratio. This change is set to happen right at the end of December. Now, here is where it gets a little tricky for some shareholders. If you own, say, 10 shares, after this split, you'll have 1 share and then 4 remaining shares that don't quite make up a full new share. The company says they won't be issuing these partial shares. Instead, if you would end up with a fraction of a share, they'll pay you cash for it. This means some very small shareholders might actually get cashed out. This is a massive reduction. They're going from over 45 million shares down to roughly 7.5 million shares. That is a decrease of about 83% in the sheer number of shares available. So, as the new year kicks off, their stock will be trading on this new consolidated basis. The CUSIC number is like a unique identification number for that stock, and it's changing because the stock itself is fundamentally changing in terms of its structure. Now, why would a company do this? Often it is to increase the per share price. If a company's stock price is very low, it might not be attractive to institutional investors or may give the impression of instability. By reducing the number of shares, they hope to boost the price. Per S-Hair, however, they also admit a significant risk. This move could actually make their stock less liquid. Think about it. If there are fewer shares trading, it can be harder to buy or sell them quickly without affecting the price. This is a really interesting risk they've disclosed. While usually the goal is to maintain or increase market cap, they're flagging that this split could actually shrink the company's total market value. This would happen if the market doesn't react positively to the price increase and instead sees the split as a sign of underlying weakness. They are being very upfront here. Just because they reduce the number of shares by 6 times doesn't mean the price will automatically go up 6 times. The market is unpredictable, and investor sentiment plays a huge role. Some investors might even see a reverse stock split as a negative signal, a sign the company is struggling to keep its stock price up. They are openly saying they don't know what will happen to the stock price. This lack of certainty is a big red flag for potential investors, and as is standard in these filings, they've included a whole section on forward-looking statements. This is basically them saying, hey, we're talking about the future here, and things might not turn out as we plan. So don't sue us if they don't. They use words like may, will, and expect to indicate these are predictions. Not guarantees. They are very careful to warn us not to rely too heavily on these future projections. And finally, they've listed the exhibits, which includes the press release they issued about this reverse stock split, and this interactive data file, which is for regulatory purposes. When you look at Rithm Property Trust Incorporated's decision to enact a reverse stock split, it tells a story. On one hand, they're clearly trying to engineer a higher share price, perhaps to make their stock look more appealing to larger investors or to meet certain listing requirements. This is a common tactic, but it's often a sign of a company that's struggling with a low stock price or fears being delisted. The fact that they're explicitly warning about decreased liquidity and a potential drop in market capitalization suggests they're not entirely confident in the positive outcome. They've moved from a massive number of shares to a much smaller pool, hoping to reprice the stock. However, the market has a funny way of reacting, and often a reverse split doesn't fix the underlying problems that led to a low stock price in the first place. Investors will be watching closely to see if this is a strategic move that revitalizes the stock or a cosmetic change that masks deeper issues. The biggest risk here is that the market sees this as a desperation move, and the stock price doesn't recover, or even falls further, making it harder to trade and potentially reducing the company's overall value. It's a bold gamble, and only time will tell if it pays off or becomes another cautionary tale in the world of corporate finance. Alright, that is our breakdown of Rithm Property Trust Incorporated's latest filing. What is your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.